Welcome to Biz Filing's Expert Insights.
Hi, I'm Greg Corombus. Our guest this week on Expert Insights is Chris Corosa. Chris is a certified trust and financial advisor, the author of multiple books, an entrepreneur, and a frequent columnist at Forbes.com. As this pandemic has unfolded, we've explored here on Expert Insights how to know whether you're ready to turn your side hustle into your new career. Of course, there are many factors that go into that decision, but if you're going to take that side hustle more seriously, you also need to take your liability protection seriously. That's what we'll talk about here for the next several minutes. And Chris, thanks very much for being with us.
Thanks for having me, Greg.
Well, let's start at the basics. If your side hustle is more of a hobby and it's not really much of an income generator at this point, what designation should you be having?
Well, I think it really all depends on what you feel your liability exposure is. And it doesn't matter whether you're making money or not. It's really the downside that you need to determine whether or not you should be using a sole proprietorship or a Schedule C or LLC or Schedule S. There's a lot of different types of ways to organize yourself. And it really, the very first question you've got to ask yourself is, who am I going to make mad? And how will I hurt them, and how will they come after me? So that's really what you got to focus in on first.
So the type of business obviously makes a big difference. Is there any business where you have virtually no liability risk, where you can be a little more patient with this, or does every business owner have liability somewhere or another?
Well, first, you need to understand, your listeners need to understand, I'm not an attorney, so I can't answer the legal aspects of questions. I have interviewed a number of attorneys for articles that I've written, for example, in Forbes.com, where most of my work will be appearing. And I will say, and also from personal experience, that there is almost no way you can say you can have no liability. It's all in shades of gray, various levels of liability. There's some things that if you have very little interaction with the public in any way, the chances of hurting someone is small. However, if you're, for example, creating content, and we see this in all sorts of forms of liability, not necessarily legal liability, but also personal brand liability, which is not really what we're covering here, but it applies as a metaphor. So even if you write something or if you create something that people willingly consume, they can either consume or not consume, you may use a wrong word and that'll upset somebody. You've just got to be careful. And really what you're doing is you're assessing the relative risk, the relative likelihood that somebody will be harmed and will come after you. So here's another example. When I was just starting, many, many, many years ago, I ran businesses when I was a teenager. Let's pick one. It was a baseball card business. I was a baseball card dealer. And football cards too, for those who are purists on this. And, so what's the chance of getting sued by somebody in doing something like that? Well, you can have a trade that goes sour for some reason. Somebody thinks that you ripped them off on a trade. That's a typical sort of transaction-related liability that you would have beyond the actual cost of whatever transaction it was. As a teenager, I don't have any assets. So nobody's going to come at me at full bore, and try to get millions of dollars from a 14-year-old kid who has barely $14 in his bank account. So your relative risk is lower in that case. So you don't have to go out and full-fledged and pay all this money to come up with a fancy legal organization to protect yourself from a liability standpoint. On the other hand, you can have a very innocuous type of company, very, very unpretentious type of business, hobby, if you will, and you have hundreds of thousands of dollars in your bank account, either through your savings or whatever. This would generally be an older person who would have this, but you wouldn't think that the hobby would be anything related to that. Well, if somebody thinks they're rich enough, and rich is a relative term, they can come after you. So you'll want to separate your business from your personal life. You don't want to lose your home because you failed to put a pepperoni on a slice of pizza, for example. And I'm being somewhat facetious here, but really that's the level of this liability. You cannot measure it totally, but you've got to just anticipate the likelihood of it.
And so according to the column you wrote for Forbes, that's where one of the weaknesses for sole proprietorship comes in, because your personal assets are not necessarily protected. And so then other options come into play, like an LLC, Schedule C, Schedule S, like you mentioned before. And so then it becomes a little bit of a debate about when is the right time to pull the trigger on that. In fact, the experts in the column, one said, oh, if you've got one paying client, you should probably have something other than a sole proprietorship. Other people saying, there's some costs associated with having those entities that might be more than your income. So maybe more like 50 or 60,000 in income is the time to make that jump. So is there a consensus from the experts out there on this?
This is a classic case where you ask 12 experts for their opinion on it and you'll get 24 answers. As a reporter, I have to deal with this all the time, and I have to figure out, well, which one of these answers really is relevant to the article. And in the case that you bring up, Greg, it's on point. You will get a variety of answers depending on what attorney you talk to. This is why it's a good idea to try to get several different inputs, maybe talk to several different attorneys, not necessarily pay them. I mean, there are ways to talk to attorneys where you don't have to pay them. I mean, it's not that they won't answer specific questions, but they'll give you enough generalities to help move you along. But I think, again, I'm a very risk-averse person, which may sound ironic since I am a multiple entrepreneur. Actually, I wrote another article on Forbes.com that appeared last week, talked about risk, the nature of risk in entrepreneurs. And entrepreneurs are not risk seekers, they're risk managers. So the way I manage risk as an entrepreneur is I try to get that downside as low as possible, as low likelihood as possible. So I'm going to worry about liability really from the get-go, even before I get my first client or make my first sale. So that's me personally. You might be more daring. And I know entrepreneurs who are more daring, who just say, forget about it. I don't care. If I lose all my money, I'll just start another business and make the money back again. And this is a very common idea, especially with entrepreneurs. I would say for the run-of-the-mill person, it's probably better to err on the side of caution. Be safe. And I think if you're going to look for a threshold or some sort of critical point where you want to make the move away from sole proprietorship, I would say if you have earned enough revenue in your sole proprietor to be able to establish some form of legal entity, whether it's an LLC or a corporation, then go ahead and do that. And what's that dollar amount? Depending on the state you live in, it could be roughly anywhere from, say, $300 to $1,000. So it's not a high level, but it just gives you a chance to sleep better at night. I would think that's in my mind.
Another thing you mentioned in the column, Chris, relates to taxes and the pluses and minuses of the various statuses there, because with the sole proprietor, there's additional taxes. And if you make a lot of money, that can really be burdensome. But for the most part, as a sole proprietor, you can just throw that on your individual return. Whereas with the others, tax prep gets a little more complicated, and that has costs. So what do the folks encourage in terms of balancing the cost of taxes, both the taxes themselves and the tax prep, and figuring out where you ought to land here?
Yeah, so that's an excellent question. Liability is one side of the equation. Taxes are the other side when you're determining which of these entities you want to form, which type of entity you want to form. And a lot of it will do with your projected revenue. If you're just making a small amount of revenue, there are some advantages, say, with an LLC versus a C Corp or an S Corp. How you want to handle that revenue, even look at the difference between an S Corp and a C Corp, how you want to handle that revenue. With an S Corp, it flows through your own personal income taxes. With a C Corp, it flows through the company income taxes, and one or the other may be of an advantage to you. In addition, and here's another thing, is how are you going to finance your company? So that's a third thing that you're going to be looking at when you determine how to structure your company. If you want to bring in outside capital, especially if at some point you feel like you want to go public, then you're going to have to be a C corporation. You can't be an LLC, you can't be an S corporation. How you want to structure your ownership, if you want to have the ultimate flexibility in terms of owners. So this is not public funding. This is actually private owners who are funding the corporation. Then LLC will give you some advantages over an S Corp, which will give you some advantages over a C Corp. So you're going to not only want to talk to say a corporate attorney, somebody who's used to setting up corporations, you're also going to want to be able to talk to a business accountant, somebody who is familiar with the tax situations and all the different scenarios that go into utilizing that revenue once you get it in your company.
Chris, as you mentioned, you've started a number of businesses, and so you've dealt with this process before. So 2 questions as we close here. First of all, have you always been comfortable and glad you made the entity formation decision that you did?
That's a great question. One of my companies I started as an LLC because I started with partners. And when you do that, there are some limitations on what you can do, but it was structured as an LLC because there were limitations on an S Corp that I also had started a company with an S Corp. But there were limitations on the S Corp versus what I wanted to do with this partnership construct that I wanted to use for the LLC. When I ended up essentially buying out all my partners on the LLC, I kind of regretted that it wasn't an S Corp, but fortunately they had modified the rules on the LLCs where from an accounting standpoint, it could be treated the same way as an S Corp. So I kind of lucked out in that standpoint. You have this flexibility, and it was the accountant who pointed it out to me. But other than that, usually I'm pretty comfortable with what I've selected, and I have selected almost every form of entity that you could for the various businesses that I created. I think the only thing I did set up a partnership. I didn't like the partnership. I didn't like the partnership because the liability protection wasn't as great as an LLC or an S Corp. So I guess that's the one that I would say if you're looking at starting up a partnership, you really need to be mindful of what your liability exposure is within that entity.
And lastly, Chris, you mentioned before that you're not an attorney and some legal assistance will be required usually to establish these entities. But from the perspective of someone who's not formally trained legally and as an entrepreneur, is this a daunting process to choose and to go through the process? Or is it something that's fairly easy to understand usually?
You know, I will tell you the honest truth was that I was intimidated by this whole concept, this whole legal concept. I'm just really afraid of the law and legal matters because I don't really know. I'm not an expert on that stuff. And even when I would talk to attorneys, I was kind of intimidated by them. But what I found is, first of all, you find attorneys via your normal everyday living, the clubs you join, the organizations you belong to, not the companies that you belong to, but these social groups or these service clubs, like Rotary or whatever, something like that, where there are attorneys, and get to talk to them, go to the meetings, go to the chamber meetings where they have attorneys talking, and you will get more comfortable with the nature of the questions that you need to ask. And eventually you'll get to the point where I'm at right now, where it's like, secondhand, I'm not an attorney, but I probably know all the questions that you need to ask an attorney, at least at the very, very minimal level. And I'm quite comfortable doing that. I am also quite comfortable accepting the fact that I'm not an expert in it and that I need this opinion. And so I go out there and get it, and I work with it. And I explain to the attorneys, hey, I'm an entrepreneur. I'm not going to pay you by the hour. This is one of the things I say. I'm going to pay you X number of dollars for fulfilling this mission. However much it costs, if you need to calculate it by hour because you estimate it's going to take you 5 hours, that's fine. But I'm going to just pay you this set amount to get this paperwork done. This is the plain vanilla stuff. I'm not asking them to take on something that they've never done before.
So do your homework and get the help where you need the help. Chris, great discussion. Thanks very much for your time today. We appreciate it.
Thanks, Greg.
Chris Corosa is a certified trust and financial advisor, the author of multiple books. He's a serial entrepreneur and a frequent columnist at Forbes.com. I'm Greg Corombus, and for more information on this topic, please visit bizfilings.com.
Biz Filings, a Wolters Kluwer company, has been incorporating businesses since 1996.